customer success at Corus. I'm joined with my esteemed colleague, Drew Chambers, VP of Marketing. Today, we're going to walk through our Fintech piece. We've teased this out a little bit, so today we're actually going to pick Drew's brain on why he created this survey and go through some of the results and just share with you guys all of the cool things that we were able to find. So let's get started. So Drew, I know this survey was a little bit unique because you actually have a background in the fintech space. So talk to us a little bit about, what you know in the financial space as far as what really triggered you to want to do this type of survey.
Yeah, so going back well over a decade, I worked in finance before and then through the actual 2008 financial crisis. I was in New York. I was actually at Bear Stearns at the time, which some of our viewers may remember, who actually started the financial downturn. That was not my fault per se, but an interest in finance and economic history has always been something near and dear to me. And when we were thinking about new topics to write about, I think the emergence of some newer opportunities for people to get involved in the markets and invested in the markets really was, one, interesting, and two, I think it was something that was covered pretty pervasively, but not in the way that we wanted to cover it. So I think that all of those components kind of came together for us to put what I hope was an enjoyable and informative piece together for people.
Yeah, absolutely. There's a lot of information in there, and a lot of things that I personally wouldn't have known or even, been on the lookout for as far as new apps that are up and coming, and also just the trajectory of where the space is going. So maybe talk us through maybe some of the questions that you molded, even if you wanted to share what you had going on your screen, we can just kind of walk through the layout of the survey.
Yeah, for sure. So jumping into the actual survey itself here, we've got our FinTech survey. You can see we got over 1,000 responses for this survey. I think one of the things that we really wanted to focus on was, one, we wanted to find out, one, if people were investing in the markets, and two, if they weren't investing in the markets, getting a little bit more insight into, whether there was a lack of trust in financial institutions, whether they did trust traditional banking as opposed to investing in the stock market, if they viewed those things differently. So we had a lot of, as you can see here on my screen, we had a lot of different redirects and if logic applied here, because we wanted to get a pretty good sense of how people were viewing these things. I think the overall goal of this survey was, one, to find out how familiar people were with newer apps that promise easier investing and better access to the market. So things like Robinhood, even some older technologies like E-Trade. We also asked, you can see here, as I'll pull up the app investing question, as you can see here, we really were trying to dial in what is it about these apps that people like. Was it just, hey, a friend suggested it? Is it just, hey, I heard about it, I want to try something new? Was it, I want to be able to invest from my phone, like Robinhood and Acorns make it very easy to do. So this was the core of what we were trying to figure out. And then from there, much like we did with our Meatless Meats piece, we wanted to see, are these companies uniquely positioned with the way that people are thinking about the markets today? Are their messages really on brand for what people are looking for?
Yeah, that's great. What do you think really drove people to want to have an app, I guess, to have ease of accessibility? Maybe just talk through, why do you think personally apps were the new kind of trend in banking?
Yeah, it's a great question. So obviously the very basic concept of it's easy was pretty high on people's lists. Being able to just simply open up an app on your phone, feels a lot like a lot lower barrier to entry than, say, having to sit down with a financial advisor. I think, as we saw in the data here, a lot of people didn't really value sitting down with an advisor that much. So I think that was pretty interesting, and probably marked a little bit of a shift in how consumers are thinking about these products. If I jump over here to the dashboard, there's a couple things I did want to show you. Um, if we go into investing factors here, you can see here we ask people to rank on unimportant to very important scale, um, various components of their investing method or the company that they're investing with. So you can see here that I make a certain return every year. This actually was, this was very important to a lot of our respondents, not surprising. The one that did jump out, I think, was that the money being safe in a downturn. This is one where you can see here, and I'll just pull up some confidence intervals. You can see that this is very important. This is an outsized importance to our respondents. So I think what you're seeing here is a little bit of a reflex to the downturn that I mentioned earlier. So the 2008 Great Recession. People are starting to say, I want to know that my money is safe, and part of that safety is that this next question here, that I have ready access to my money, so that I can jump into an app. And I can see what my portfolio is invested in. I can make changes as need be. And again, the idea of sitting down with an investor, knowing that you have a physical branch presence in your city, that was less important to people. So I'll pull that up here as well. So you'll see here, a physical presence in my city. How important is this? You can see it's really somewhat important, neutral, not important. That we got a full smattering of responses here. So people seem to be skewed more towards that protectionism and an understanding of what their portfolio looks like, which is just very easily done when you have an app that you can click into on your phone.
Yeah, that's great. So taking a step back in a time machine, when you were in the space, would you have thought that that would have been the resonating message with folks?
No, I think a lot of what we talked about. So I worked in a variety of different capacities within financial services, but one of the major components was in wealth management. And a lot of what we talked about was how you could talk to your clients, how you would explain and educate them about, a diversified portfolio and dollar cost averaging and rebalancing as your portfolio shifts and certain components become a larger percentage of their portfolio than others. Those were all the things that we seemed to really focus on. Now, we were not, and I in particular, were not focused on every investor. We tended to be higher net worth. But that, all the same, I think people are people, and the same fears and concerns of somebody that's just getting into the market are also exist if you've been in the market for a long time or have more money invested in the market. So I do think that there were missed opportunities, and I think the company that I was with, we started to explore some better digital tools to enable our clients to see what was happening with their portfolios. But that wasn't the number one focus. And so where I do think that, again, Robinhood, eToro, WealthPoint, Acorns have done a great job is building an infrastructure that people will be able to go on and again, kind of assuage some of those concerns very rapidly. And then at the same time, it's giving them access to the market so they can continue to educate themselves and potentially continue to invest.
Yeah, that's great. So you touched on this already, but what do you feel was the biggest kind of aha moment? Like when we were looking through Meatless Meats, it was like, duh, but people wanted it to taste good. What do you think that moment was in the FinTech survey?
Yeah, there were a couple here, and I'll actually pull up. This is funny, or maybe not funny, but rather telling. That we asked the question, do you think it's possible to beat the market as an individual investor? Now, surprisingly, a lot of people said no. So I think, we could go down a whole rabbit hole of what that means, and this sense that only financial institutions or large institutions can beat the market. But the majority of people did say yes, they think an individual investor can beat the market. But then we asked, do you think that you are beating the market as an individual investor? And you'll see here, again, the majority of people and outside within a band of confidence said no. So it would seem to say that all of the messaging and all of the work that some of these large institutions have put into trying to show their clients that, hey, we're going to build a great portfolio for you and you're going to do really well, or you're going to beat your Lipper average, or all the buzzwords from the commercials that we hear, it would appear that they're not really working or resonating with people, that investors are still believing that they're lagging the overall market. Now, as we're talking, we're in the midst of a major market correction, so maybe that's a good thing, and people are getting the benefit on the downside here. But I think that was one big piece. And then again, I mentioned it here. A physical presence in your city. There's a lot of different companies that specifically call out, talking to your broker, being able to sit down with an investment advisor. We've all seen those commercials of somebody sitting in the office with a traditional advisor. And it would appear that that's not something that people are that concerned with. So again, I felt like as we were going through this, we were seeing a little bit of a disconnect between the advertising and the marketing messaging that's being put out there by some of the traditional, what we might call brokerage houses, and some of the newer companies that are really understanding where the consumer's head is. The last thing I'll point out here is the trust in financial institutions. So, we did see a fair amount of trust in financial institutions, which is encouraging, but we also did see a fair amount of lack of trust. And then asking people, what do you not trust about financial institutions? Certainly that they operate ethically, being the outsized response here was a little bit surprising. And we certainly could even probably do an entire piece just on that.
Yeah, absolutely. Very interesting. Well, where can people find this article?
Yeah, as with everything that we talk about, if you go to blog.cor.us, you can see any of the content pieces that we've put up. You can also follow us on LinkedIn or Facebook, and we post to there as well. And in this video, you'll find a link. You can actually jump in and give us a suggestion, something that you want to see us cover in these videos. So everything from covering the platform itself to any type of content ideas that you'd like to explore. Sound off there or the comments section.
Great. Well, thanks so much, Drew. I know that I really enjoyed this piece, and I'm sure everyone will like to know a little bit more in depth on how you mastered it up. But again, thank you. And thank you guys. We'll see you next week.